Hello and welcome to It's Your Business with Mario Toneguzzi on Megapix Media. Joining me today is Anne-Marie Lurie, who is Chief Economist with the Calgary Real Estate Board. Thanks for joining us today, Anne-Marie.
Thanks for having me.
All right, so CREB put out the monthly statistics for October here on Monday. Let's take a look at some of the data. Let's start with MLS Sales. I see that they were up 22.7% year over year in the city. Can you tell me a little bit about why that's happening?
There could be several reasons. First of all, some of the sales activity was so weak in the second quarter when COVID came through that we still feel that some of that activity is being pushed later to the year. The other aspect of it is the fact that interest rates are so low. We've seen that interest rates have come down. And, in our market, a lot of people were pushed out of the housing market back a couple of years ago when we had higher rates, the stress test came in. Well, now that we have these lower rates and the stress test has come down a bit just because of the lower rates and the fact that our prices are lower than they were 2 years ago, this has kind of created an opportunity and people are starting to get into the market at this stage.
Okay. And now when you look at that number, how does that sit historically, though, for the month of October?
It is still, well, based off longer term trends, it is actually above longer term trends. It's not, by no means are we at record levels. Okay, so that's just something to keep in mind. We aren't all of a sudden at new record highs by any means, like other markets across the country. Like we're not there, but we're better than at least we've been over the past 5 years. So we saw, very strong activity in October. Now, keep in mind that even though we've had strong activity over the past several months, it has not been enough to offset the pullbacks that we had earlier in the year, as our year-to-date sales numbers are still lower than what we were last year.
Okay, and when we look at, obviously the last couple of months have been fairly good in the market in terms of activity and transactions. I take it that more people now are seeing the possibility of selling their homes. So new listings are up 3.8% from a year ago. Is that the dynamic that's taking place?
Yes, yeah. So we are starting to see that new listings are coming up. They're still lower than, it hasn't been enough to offset the increase in sales. So we have started to see those listings come back, but inventories are staying quite low relative to the sales we're currently having in the market. So, we do expect that as things start to shift and move forward, we could start to see those listings numbers rise again. And continue to rise like that. But at this stage, we are, it hasn't been quite enough to keep pace. There's a few metrics that we look at. The sales to new listings ratio, we're hitting in that 70% mark. So that tells us that out of every 10 new listings that are coming on, 7 are selling, right? So that's a fairly high number in terms of, what we see in terms of the market. And, that does impact what we're seeing in pricing. So it's starting to influence our prices as we move forward. Because when you have those tighter market conditions, we start to see the influence on price.
Okay, so the price you just mentioned, it's overall price is up 0.05% from a year ago. 422,600 is the benchmark price, right?
Yes. Okay, and that's that's total residential. So that's for all product types. So
what is happening with prices? It's been fairly flat and stable, hasn't it, for quite a while now?
It has been, and I mean, and to a certain extent, it was trending down earlier in the year as well. So we have seen at least those numbers start to come back up. They're still lower than they were, on a year-to-date basis. They're still lower than what they were last year. But it's because that the market is much tighter than what it has been, is why we're starting to see those numbers start to shift and prices are generally starting to trend up. Now, one thing to note is I think this market is very different depending on what price range you're in, as well as what product type. Because what we are seeing, just surveying, some of our communities, is that much of the price growth is actually occurring in the lower end of the market. So that's where we're starting to see improvements. And it makes sense because the months of supply for some of these areas is under 2 months. Like that's just not a lot when we think about how many sales and supplies in the market. So we're seeing that the prices are rising in those lower ends, but at the upper end of the market, prices are still declining because there's still a lot of supply based off of the sales.
So, Anne-Marie, you mentioned months of supply. It's in October, it was 3.31 months, which is down 12.4% from a year ago. Can you explain just a little bit about what the months of supply is in terms of a measurement and, at 3.31, what that means?
So what it essentially means is what it is that it takes a look at all the inventory currently in the market, and it really takes that inventory and divides by the number of sales that are happening in the current month. So the reason why we like this indicator, because when you're at 3 months, it tells you at the current pace of sales, it would take 3 months to clear out all the inventory in the market. Now, why we use this is because there is a very close relationship between the months of supply and the price. So when the months of supply gets a lot lower, we start to see prices trending up. If it's too high, that's when we see prices decline. So it's a measure of that market balance.
Yeah.
And what we're seeing right now is very balanced conditions, which starts to support, your normal type of price growth. But again, it's not equal across all product types. So what we're seeing is that while it's much more balanced in the detached market, in the apartment condo sector, there is still far more supply than demand. So that's the thing that, one of those things that we look at as a measure of, how can this influencing pricing moving forward? And we are seeing that, because the conditions have moved into much more balanced territory, in some cases closer to seller market conditions. So that starts to support some of the price growth.
Okay, super. And one last question, Anne-Marie, as we look to the last 2 months of the year, what can we expect in the local real estate market?
We might, we don't go by month per se, but I would expect that we'll probably see very similar conditions, at least for the remainder of this year. But keep in mind, there still is a significant risk in the market. There's a lot of things that are still not sure. We're not sure if we're going to go through a second wave of shutdowns. We still have a fairly high unemployment rate in Calgary, and we've still seen some job losses in our professional and technical services, but we don't think that will start to influence the market until really more into next year. Right now, we're still playing a bit of that catch up, and there's enough demand there to actually support us through to the end of the year. It's more about how this plays out into next year.
Okay, super. Thanks for joining us today, Anne-Marie, and I'm sure we will talk in a month's time about the November stats.
Absolutely. Thank you.
Okay, super. That was Anne-Marie Lurie, who is the chief economist with the Calgary Real Estate Board. This has been It's Your Business with Mario Toneguzzi on Megapix Media. Thanks for joining us today.